In this video,
My price prediction.
we dissect the business behind one of the most exciting stocks on the market right now,
See, Chargepoint don't just provide the charger, they also provide
with particular interest in their business model, finance, and predictions of where they are going to go. We dive deep into what their customers have to say
what makes a company great is the product or service it can.
to help us understand if the company provides a good product and service, and we finally look at where the company itself aims to be in the next few years. Using this information, we try to come up with a price prediction for the stock. I'll give you a clue, it's a good one.
Hey guys, Dean here. Real quick before we start, I feel that right now people are investing in just a ticker symbol. They're not investing in the actual company, and this is because there's so much hype with stocks right now. There has been for a good part of this year. A lot of people have recently gotten into investing. They saw the pandemic as a great opportunity. A lot of stocks went down, and the first place that people started researching was YouTube, and then everyone's speaking about all these stocks, all these hype stocks. Everyone's making quick money, and that's really, really good. But I feel that the whole sector has separated itself from the cause of investing in a company, and that's the actual company. See, I've got a business degree in marketing and management, and I've also been helping run my family business for about as long as I can remember. And I want to use this knowledge to help truly analyze the business. I don't want to just speak about the stock action or what news is coming out about the stock. Although this is very important, we're still got to do that. But I want to speak a bit more in depth about the company itself, their business model. Where do they make their money? How much money do they make? Is it worth it? What's their management like? What are their operations like? What's the marketing like? Things like this. Now, depending what information's out there and what I can find, it will vary from video to video about the companies we cover and what I can speak about. For example, in my video about Airbnb, we spent a lot of time speaking about marketing. By the way, if you want to check that video out, I'll leave it at the end of this one. However, in this video about Chargepoint, we're not going to spend too much time covering the marketing. We're going to spend more time covering the service, the business, the operations of the business, exactly what it is that makes them money, how much money does it make it, where are they projected of going. And utilizing this information, we're going to try come up with a price target for the company. Now, I'm going to warn you, it is a long-term price target, but it is a good price target because this company, I see them doing really, really big things. So be sure to stick around for the whole video because I really think you're going to get value from what I have to say. Now, just because I've got a business degree does not mean I'm a financial advisor. This video is for entertainment purposes only, so please always do your own research before investing. Let's get into it. Quick warning, the next 15 seconds or so are probably going to be something that you already know, but we need to cover it, and that is what do Chargepoint do? See, Chargepoint don't just provide the charger, they also provide services and software as an annual subscription, and this is critical for their business model. You can get Chargepoint's customers and batch them in 3 distinctive sectors. That is commercial, fleet, and residential. And for each of these, there are unique services and products to more specify each customer's need. For example, for fleets, Chargepoint offer a service which allows them to use software to manage the most efficient and effective way to charge all your vehicles. Because if you have, say, 10 chargers, but you have 30 vehicles, well, Chargepoint software will help you schedule when to take each vehicle to the charger and for how long to charge it for. That way, none of your vehicles run out of energy, and this is a massive benefit for the customer. The customer then doesn't need 30 chargers for 30 vehicles. They can simply just buy 10 chargers per se for 30 vehicles, which is a lot cheaper and better for the environment. And the environment is something that Chargepoint is trying to help. Obviously, they're a company that supports EV, so it makes sense for them to make moves that are more sustainable, and I really like this from the company. It's a win-win because not only is Chargepoint getting more customers because they're more specified to serve a customer's needs, but the customers are also happy because they don't have to buy as many chargers. Now, if you're thinking, hold on a second, wouldn't Chargepoint rather sell as many chargers as possible? Well, that's where you're wrong, because Chargepoint managed to achieve over a 7-year period a 1-to-1 ratio between their chargers and their software subscriptions, which means in 7 years, software and warranty subscriptions which they provide actually equal the same amount of money upfront paid for a charger. In plain English, all that means is for every charger they sell, it's like they're going to sell another one every 7 years. And this is really good for the company because not only does it provide them with positive cash flow, it provides them with a sense of passive income, which is really good for the company's balance sheet. It makes it so much easier for them to make financial decisions because they know money's going to be coming in. They're much more fluid. They know things like a pandemic, so to speak, won't hit them as hard because even if they don't sell as many chargers this year, they're still going to have that passive income keeping them afloat, and that makes me really happy. That's a brilliant move for the management, and it's just really smart financially speaking. Money. Let's use that as the perfect segue to speak about what this company future looks like financially. Chargepoint see their business growing substantially as the EV market grows as a whole, and I have no reason to believe that this won't happen. Chargepoint are already leaders in the charging race, controlling 73% of the market. Their closest competitor only controls 10% of the market. There is a massive difference there to consider. They are projecting massive year-on-year revenue growths and estimate that their 2027 revenue will be over $2 billion. That's billion with a B. They are projecting their EU and global market share to rapidly grow, even overtaking their American revenues. Not only are they projecting this immense growth, but also for their gross margin to improve as product releases stabilize and software revenue starts rapidly growing thanks to a little thing we love in investing, and that is compounding. As their annual subscriptions are coming in and more are coming in, all this money will soon start coming in more consistently and in larger amounts. They are projecting their gross margin to reach 42% by 2026. Remember, that's the same year that they're predicting $2 billion in revenue. Customers, look, at the end of the day, what makes a company great is the product or service it can deliver. If you look at all the big companies in the world, any major company, any major brand, Apple, Google, Amazon, all these really big names, they all have one thing in common. Their product or service is the best. That's why they get there. It doesn't matter how good your marketing is, how good your website is, how good your customer service is. All these things, yes, they are absolutely important, but what's gonna get you to that next level is always your core business. Is the product or service good? That's why it's important that although we see all these good things for Chargepoint, what are the customers saying? What are the customers saying? How good is the product or service? Now, unfortunately, I don't own an EV vehicle myself to go out and test and come here and report back to you guys and say, yeah, I'm really happy with it. But what I can do, I can go online and look at customer reviews. Now, before we get into the reviews, I want to quickly note, people are more likely to leave a negative review if they're disappointed than a positive review if they're satisfied. So just keep that in the back of your mind. Knowing this, let's jump online and see what the customers have to say. Okay, this is not what I was expecting. On Yelp, they only have a 2 out of 5 star review average. Looking through their most recent reviews, most of them are complaining about the same thing. And that is the fact that you have not yet smashed the like button and subscribed. In fact, I can't continue this video until you do so. Only kidding. What they were really saying is that there seems to be a lot of bug in the system. People struggling with creating accounts, to problems with the cost of charging. But the main thing that really stood out and disappointed me was that there were multiple complaints from businesses who wanted to buy the product, to buy the chargers, to sign up for the software, but they were met by a really poor sales team who even answered, and I quote, "This is not my job," to someone who had inquired about the chargers. I'd really like to see the management team take this seriously and get to the bottom of just what's wrong in their marketing team or their customer service that's causing people to leave their negative complaints. That really disappoints me that that's happening because there's no excuse for that. As far as bugs in the system, we need to remember this is still an emerging technology and this is to be expected. Hopefully over time this gets less and less to the point where it no longer exists. But until then, unfortunately, it's just something that they have to keep working on. One more thing to note, and I'm not making excuses for Chargepoint, but they have obviously a massive market. They have a lot of customers that have these products. The amount of reviews that I could find online was very small compared to this, which tells me there are a lot of people that are just happy with the service, that are just happy with the products and just haven't written a review. That's how I see it. This isn't really a company that you'd write a review about. It's not a restaurant. A lot of people will go into a restaurant and then be happy to write a review about it, but charging stations, I don't think so. It's not like you go fill up your car and you get really good service and you're really happy with the fuel and it's good quality and you're gonna jump on leave a review. But if you went to that same service station and charged your car and they overcharged you or they put the wrong fuel in there, then you'd be the first to write a review. So that's just how I see this. That's what I think is happening here. Overall, I do see Chargepoint as a solid company and I believe it's one with massive long-term potential. Let's not waste any more time. My price prediction for this stock is if they do hit that 2 billion in revenue, which I think they would, is $160 a share. That's where I see them going. Of course, this is a risky play, especially at these high prices. Remember, just a month ago, we were at $16 a share. And as this stock gets more and more expensive, your risk gets higher. It's crazy to think that a month ago, if you bought in, I'm predicting a 10x on your money. Now, that's a long-term prediction. If you're not a long-term investor, if you're thinking of swing trading this, then I'm not too sure, but I see 160 as a fair price by 2026. We're talking 6 years. They were at $38 a share as of recording right now. So that's still over 4x your money. Remember, I am not a financial advisor and this is not financial advice. Be sure to smash that like button and subscribe for more videos like this. Thank you so much for watching. Till next time, have a good one.